Welcome, everybody, on a great Friday, sunny afternoon. We have a lot that has happened in the last couple of weeks. We've been bombarded by federal government regulations. The interest rates have been on a flux, and so we thought this would be a great opportunity. I have a two-series webinar, one with our mortgage partners, Matrix Liquidity Partners, and we have a second session on the 3rd of May with Cormans to kind of give you guys a good headway of what's happening. So we'll be discussing some pros and cons. Kamran always has a positive spin to all that's thrown our way, which I love about him, because that gives him the aspect of creativity and understanding exactly what's going on and how it's going to affect the real estate market. And I think his Sana Naqvi is on as well, who works with
Hi.
Kamran. So, hello, Sana. So, I will give over the floor to Kamran. And please, guys, any questions that you have at the end of the session, by all means, we will let you put your questions in and ask these guys. As you know, I've introduced them multiple times, but they are our mortgage partners. Some of our very established realtors have worked with them for long term, so this is not a new relationship with the brokerage. Kamran and Salman go back years and years, and so this is who they are, and I'll give the floor over to Kamran and Sana.
We at Matrix Liquidity Partner, our take is very different on this interest rate increase. But we have not seen any change in the volume of the business we are currently doing. We're pretty much doing the same volume which was year to date, January, February, March. Even our pipeline looks very strong. Impact on the real estate market, I think the impact on the real estate market is going to be a short term. There are two kinds of buyers currently in the market who are sitting on the sidelines: the first time home buyers and those who are looking for like deals. Right. For first-time home buyers, I don't think so that there's any change in the banking guidelines or policies or procedures when they're looking for a mortgage. The only thing which is going against them is their monthly budget. Because the interest rates are going up, their affordability has changed. But on the other hand, if you look on a positive note, there's no multiple bidding going on. They have a lot more choice now. Before they were having difficulty finding the dream house. Right now they have much more choice. I think that the temporary increase in the interest rate is going to favor the first-time home buyers if the realtors approach it from that point of view. The problem is we always go and do budgeting, but we have to understand how the dynamics in this capital markets work. Whatever was going on from the last 10 years needs to be addressed. So this interest rate cycle going upward is temporary. It's not going to last more than 5 quarters. And after that, in mid-2023 onward, you're going to start seeing the banks will change the ongoing policies and procedures, and the interest rate will start coming down. So I think it's a good opportunity for the realtors themselves. They educate how the capital markets work, how the bond market works, and put that confidence in your buyers. If you are not aware how the capital markets work, bond market works, you will not be able to convince your clients why this is the best time to buy property.
So from what I can hear is this little window of opportunity that we have from now into possibly
third quarter of 2023.
mid 2023 is where we need to jump in and purchase, because this is where we will be able to actually get financing and inspections in, and possibly not be standing in a lineup of 30 different offers on the same property.
No, I think, see, when you look at the bond market and when you look at some other vehicles in the capital market, it's already priced in. We all knew that. What I'm trying to say is that right now there's a lot of people who are not being educated properly. The way the media talks, the way the bankers sitting in the banks, they are being trained right?
Mm.
All they're doing is they're giving you negative information or putting fear in you. You're buying a house, you're not buying a car that after 2 or 3 years you're gonna just return it. Yes, with a property, you're gonna move from one property to another property as your lifestyle and your employment related things change. It's a long-term investment owning a home, right? So what we are
Mhm.
seeing right now is those people who are on sidelines because of the availability of the listings or because the for some other reasons, right? This is the best time for them to jump into the market. They have enough availability and they can get a fair value for their property. Banks, on the other hand, some people think that because interest rates are going up and up and up, banks are going to be tough. No, we have not seen any kind of policy or risk appetite change in the banking world. As I mentioned, our volumes are still intact. We are still doing same amount of business which we were doing last year, and we expect more business this year because now all those clients who were sitting on the sidelines in the last 4 years, the value investors, they are the ones scooping up properties right now because they know this cycle will end after 4 or 5 quarters, and the market will be back to where it was. So I think that interest rates going up is just required to curb inflation on a short-term basis, and the bank want to balance their books. Apart from that, it's a good opportunity to buy property. I will be a buyer in this market.
Mm-hmm. Right, right. Amazing. So yeah, th this is a really good point, and this is gives us all assurance that you suspect that by mid to 2023, the interest rates will be coming down again, and then it'll be a rat race again. So
Yep.
I help make your clients make that decision where short term. And I mean, if they're in a variable fixed variable anyways, it doesn't matter, right? It'll adjust itself.
Give
And
you
like you
another
said, this is
idea.
not a short-term purchase.
No,
This is a
another.
long-term
It's
purchase.
a long-term purchase. After this property, you might move to another property as your family needs change. Another important aspect. Right now, all you hear in the media is because of the high inflation, we have to increase the interest rate to curb inflation. But they don't tell you how the inflation works. Have you ever seen anything which was for $10 suddenly become $8? No. Prices will never come down. If we are experiencing 6 to 7% inflation, maybe they can bring it back to 4% or 5%, but you have to understand that the cost of doing transaction has gone up. Employers are increasing wages accordingly. There we have a acute deficiency of talent, right, in this country. So even if the inflation numbers are going to come back to 5% from 6 to 7%, but the cost of replacement has gone up, builder cost, land cost, everything has gone up. So you will not see these prices come down. What's happening right now is multiple offer is gone. You have more listings in the market, giving more choices to your buyers.
Yes, for
Interest
sure.
rate, when it comes to interest rates, they will be coming down. You have to understand the housing related activities almost 15 to 20% of Canadian GDP. It's one of the major sector of our economy. It has to stay in affordable and in a healthy environment. It's just because of the COVID, the way the government pumped the money, they have to adjust their books, and they have no other way just to cook books, sorry to say. And rising interest rate is one of the tool they're using to balance out their books. But after a few quarters, the same government will say because of the high interest rate, we have retail sales going down, we have less business activity, we are entering into recession, and there you go. They're going to start slicing these interest rates 50 basis points, 70 basis point, 25 basis point. So that's why I'm saying I have seen these cycles 4 times in the last 20 years. Sabiha, most probably David, and many of you have seen it.
I'm too young for that. Kamran, you're on
Okay,
your own
so
with the 20. I was born 20 years ago, so
I'm
I
young
was
too, but I'm
born when.
I'm in this field for so long. That's what I meant. So what I'm trying to tell you is we have seen these cycles again and again, and it's very easily available if you research it from the right source. I can tell you that after a year or so, you will be laughing. Same
Yeah.
properties will be much, much higher. They are not going to come down. The problem will happen.
Guys, we've all seen this where we're like, oh my God, I should have done this last year, right? I felt this, like, I felt like kicking myself. I was telling everybody to go and buy condos in downtown through COVID, and I didn't do it myself. And then I asked, and now It's everything is in multiple
Yeah,
because honestly, nothing has changed, right?
you
Canada's
have
the
to
same.
understand
The
the
city is the
cost of
same.
doing business has gone up. So yeah, the common
Yeah,
sense thing is
of
everywhere
course.
in the world, you see one thing that the cost of doing business has gone up, cost of living has gone up. You tell me how the property value is going to come down. No
Of
way.
course.
Especially now, if you look at the macro level, we have quite a bit going on in this world. We have two powerhouses fighting with each other, right? So the movement of raw material, right, is getting expensive.
I know. Every time I speak to renovators, that's what they say is materials
Yeah.
are so much more expensive. Yeah.
Yes, because whatever we use for renovations, I can tell you that quite a bit comes from China and other parts of the world. It's not coming, right? So I will say that what I always believe in, the realtors I work with, I always have this kind of discussion with them and they agree. And the realtors need to understand that it's not just interest rate, interest rate, interest rate. It's all about discussing with your client what is your long-term plan. You want to be a homeowner. Okay, this is not the only house you're going to buy and there's no guarantee that the rates will remain the same forever, right? You need to get
Mm,
into the market, and this is a good time to get into the market. More inventory and no bidding. And the banks
right,
are there, banks are healthy, and banks are lending. We don't see any problem.
right. Um, I have a question from Abu. I don't, I mean, and you can answer it because I think everybody would like to hear about it. I'm hearing a lot of appraisers are not coming through, especially on high value properties. Abu, are you talking about expensive properties? I the word value is I'm not sure, but I think what he's talking about
Yeah,
is
appraisals are
yeah,
not coming. That's true.
yeah, and about 40 to 50% appraisal failure.
No, what's happening is, let's say
That's a very
whoever
high number.
bought
I
the,
don't know.
yeah, um, from our personal experience, we have this issue yesterday too. All those properties which were bought in January, February, or even in early March or so, right?
Mm,
Um, as long as their funding or their mortgages were done by the banks or let's say non-bank but A lenders, they look into that whether the deal was done with on a full arm length basis, which means the proper negotiation happened. This was what's going on at that time, and they are giving appraisals even if they are not happy with that. We don't see any problem with the banks supporting those purchases. When we are going to mono lenders or institutional private lenders, that's a different breed. They have to adjust their lending according to the market condition. And we know that some municipalities are down 10 to 15%
mm.
because so that's why they are redoing their appraisals. Even if the appraisal was done, file was sitting in the funding, mono lenders, they are doing appraisals again. And then they're simply saying that, well, you bought this townhouse in Hamilton for 880, now it was only 810. But with the banks, as long as the transaction was done on a full arm's length basis and the funding, all the conditions were fulfilled, we are not, they're not doing second appraisals. Abubakar, did I answer your question?
Yeah, and I have something to say about it, Abu. I mean, I saw this in 2017, and I think Kamran will agree with me, where prices had hiked so much in the spring and in summer. This was happening. I did a couple of deals myself, including one of my mom's properties, where the purchaser had to delay the closing by a week because they had to
Uh,
go to another bank because at the last minute, I think it was Scotia, if I'm not mistaken, kind of backed out of that thing.
yeah,
But the property did end up closing. However, 2017, if anybody thought that the market was on fire, we all saw what happened, you know. So
yeah,
I mean, at the end of the day, right now, what we are talking about moving forward, there will be a little bit of adjustment. There always is a little bit of an
yes,
adjustment based on journalism, based on how we are interactive. We are very, very proactive. You know, we hear something and we start reacting to
yeah,
it. It's a
yeah,
reactive market. And that is when the opportunity is, when your market is reacting, because the reaction is so quick and does not last because it's not based on actual facts, right?
yeah,
We're still extremely low in inventory.
yes,
We still have high numbers of immigration specific to our area, right? Greater Toronto area. It's not international immigration only. Anything happens around any part of Canada, whether it's Fort McMurray or it's Calgary or it's Vancouver, whether it's inflation in those areas, whether it's single industry-based real estate hikes, which diminish and people don't have anywhere else to go to, all of that uh, reflects on our market. Everybody ends up coming to the GTA area, right? You have the biggest border shared with the US. Your logistics, your industry, all of that is running through here. Western Canada does not enjoy that what we have here, right? So, and then you're bordering with I mean, you have Quebec, but we all know how Quebec economy works, right? It's not at all what happens here. So all of those factors push in. We are very reactive. Something comes out of federal government or a news breaks and everybody stops purchasing.
Yeah.
That's the moment for us to go in and educate our clients, saying this is the time for you to go in.
Yeah.
You know, because it's going to bounce back. It will bounce back. It always
It
bounce
is.
back.
Just to add another thing, we are looking at this market from a retail point of view. Like when you're working with your customer, is buying one house or maybe investment property. Look how developer and builders they hedge their deals. Developers and builders, they know what's going on in the economy. They know where we stand. Have any builder or developer start reducing the prices? You will not see any price reductions, regardless it's condos or anything, because they know anything which is getting delivered or they're starting the booking as of today, they're still going to give you the same prices which were in January, February or so. So it gives you an idea. These guys are much more organized. They have much more data and they have done their risk assessment in a much better way, the way we are doing it. If the builder and developers are not reducing the prices for new construction, why the resale will go down? Absolutely not. We will not have equilibrium in demand and supply for another 50 years. The way the speed and the number of houses every year is being constructed, especially in GTA or around GTA, with this space and with new immigration, which Sabiha is mentioning, for the next 30 years, you're not going to have equilibrium in this market. So the best thing is we are retail buyers buying one or two houses for our customers. Look at the builders. If the panic has to hit, they will be the first one to put a sale on their development. They are not. Am I right, Sabiha? Have you seen any
Absolutely. And
data?
we've never
No,
seen that.
it will
On the
never
contrary,
happen.
what,
So
yeah,
what they're doing
I've on
now
the
is,
contrary, if anybody is familiar with one blower, I was one of those people who was in a lineup for one blower. Sana, you were. This is a few years ago. Let's put it like that. And one blower they put it on the market through March break. We actually paid kids from school to stand in the lineup. The lineup started at 12 o'clock at midnight the day before, right? The builders saw the lineup. They were supposed to open their doors to the sales offices at 10 o'clock in the morning. They shut out. They said, we're not selling this project anymore.
yes.
They hiked the prices by 35% and put it back on the
Yes.
market a week
Yeah.
later.
Yeah.
Can you imagine this? Like
Yeah.
right at the door, close the door, and they said, we're not selling this right now. So we've seen what happens here, but
Yeah.
I've
And it's going to
never
happen
ever
again.
seen a
Same thing.
builder reduce their prices. You wish. And I'll tell you another thing, guys, and I'll give you a direct example. Grace of Richmond was a project that was being sold by Spectrum, and I brought that to the brokerage, and I said, because I had platinum access to it, Kamran. They sent out a letter saying $60,000 is needed more on top of the purchase price,
Okay.
right? And whatever excuse they give, right? Their
Yeah. To
approval or
rise it.
whatever they say. And they said, and the salesperson, she's a very sweet young girl who, she called me. She was panicked on a Friday evening. She goes, I don't know what's going on. I know you have a lot of units sold from your office on that project. This is what's happening. What should I do? I said, send out an email, CC me on all the emails to all of my realtors as well who've sold in that project, and let's see what happens. Not one, they had to have 71 people agreeing to that $60,000 extra on those stacked condos. Not one person said no. Not one person backed out.
Yes.
Because guess what happened when we brought it in the week after, on the next Friday, when I called up and I said, "Hey, this was last summer. We need so many more units." She said they're still available, but they're $150,000 more than was listed. And now it's
Yes,
another $60,000 on top of that.
yes, yes, yes.
This just
Another
happened
thing,
last week.
only thing you're gonna see from the builder and developer, because I was sitting with someone the other day and he's building like close to 80 units freehold. He's saying that, in this market, we want our sales office to open and stuff. What they're doing is normally what they do, they give you up to $20,000 towards your appliances and other stuff free. So they say this time we're going to market in a different way. We will take that incentive out and we will say the sale price was $999. We'll reduce to less than $950, $975, but the client has to pay for the appliances. Builder, developers, they know. They know this market is not going to go down. Another thing they always do, and they're doing already started it, they will slow the inventory in order to keep the prices intact. This will happen in Oshawa when Tribute did a massive, massive, massive project in Oshawa. They're still doing it on Simcoe Street 407. All the developers and builders, they're going to slow down their inventory until the market comes back. And you will see this year that the construction side, they're not going to be working as busy as they used to compared to last year. Because this is the only way they're going to keep the prices intact by not flooding the market with new units. Am I right, Sabiha?
Absolutely.
Yeah.
Yeah, I was saying that I'm seeing a little bit more flexibility on pre-cons these days from the builders. But that always happens. I mean, from sometimes they're actually, you put in your worksheets, you wait.
Yeah.
I'm not sure about what you're saying, because I know there's a project that just launched. Tariq has platinum access to it. He got only 2 units in the whole
Yeah.
project. So, I mean, maybe there's a little bit more flexibility, but I'm not exactly sure where that's coming from. There's always projects that they're available on open market. There's always projects that are platinum based
Yeah.
projects. So I mean, that's something that's
Yeah.
ongoing. So I'm not sure exactly which project
Yeah.
you're looking at.
And from the banking point of view, I can assure you, we have not seen any kind of new policy procedure or maybe a risk appetite has changed. No, the banks have not shown any of those things. And especially when the number of transactions are going to go down, the banks will be fighting for the business, right? They will be getting more flexible on their ratios. We might see as the number of transactions go down, the banks might come up with some new programs just to accommodate the borrower's need. So in the interest rate environment, when it's going to go up, expect banking more flexible. People get scared, interest rate going up, the banks are getting tired. It's a liquidity crunch. No, it's a liquidity crunch on a different level. Banks will be more flexible when the interest rate is going to go up again in June or July. So
Mm,
mortgage is not an issue as long
yeah,
as we meet the criteria.
right. Rania is asking, I don't know whether you want to answer this or not, because it's a commercial base, but I think you can. How are interest rates affecting commercial retail properties if the property has a 2.5% cap rate?
Same thing, commercial properties are all basically you're looking for the cash flow, right? And if the cost of acquiring that property has gone up, if your rent and your maintenance fees are reflecting that, you will keep that 2.5 cap rate. But if the 2.5, if the rent and the maintenance expenses are there and your cost of borrowing is variable and gone up, you will lose that cash flow, right? So if there's no cash flow and you have long-term tenants, you're going to have a problem with the value of the property because the investor will look for that cap rate, right? Return. So
Yeah,
for commercial
but
mortgages, better to go fixed.
yes, yes. Also, commercial mortgages are usually shorter term
Yeah,
than
2 year is the
residential,
best.
so it works a little bit differently, Rania, than residential does. I know you know of it because you are actually been dealing with commercial. So it's just kind of a different animal. And we all know how the commercial aspect of investment hikes are. It's always beneficial to buy a commercial property if you possibly can get a handle on, because they're hard to find actually.
Yeah.
Very hard to find them. Yeah. Yeah. And this is not long term. These, like what Kamran is saying, these interest rate hikes are not long term, and they won't be
No.
long term. Um Kamran, what do you think are the effects? Because you deal with so many realtors and all of that. What do you think are the effects of this new regulation with the ban on foreign investors and or possible ban on foreign investors and this international foreign investor tax being raised by 5% from 15 to 20?
Like the data which we have, or the data which CMHC or the other institutions provide yearly basis, quarterly basis, the direct foreign buyer was never more than 2 to 3% of Canadian real estate transaction. I don't know why they make it as such a big issue. If you look into any other developed part of the world, their ratio of foreign buyers are much higher than Canada. The problem here is the governments at every level, they fail to address this housing issue. And they have nothing else, no other excuse just to put it on foreigners. And their own data says that the foreign direct buyers, even in Toronto condo market at its peak, right, was not more than 3%. Right? And now you tell me, if we have hundreds of thousands of students coming to Canada to study in our universities and colleges, and if their parents think that why we have to waste $2,000, $2,500 on an apartment for rent, why not our kids buy a property? You can't stop them, right?
Of course. Yeah.
Okay, so now the thing is they're willing to give 15% or 20% extra money because they will get it once the kids get their residencies or work permit and stuff like that. But the problem is that's a different breed of buyers. That's a different class of buyers. If they can afford to pay $200,000 for 2-year university fees, they will buy $1 million condo. It's healthy for the economy. You need cash flow in the economy. You need these people in for your job market and everything. It's just the government failure, the blame it on foreign buyers. Eventually, in every healthy economy, the foreign buyers are part of it.
Amran, I 100% agree with you. Number one, it's just a mirage or a blaze that the government is doing something. So, oh,
Yeah,
let's talk about this because it really won't affect long term.
yeah,
It
yeah,
does always create some kind of anxiety in people. But I have, with our background, I've had a lot of family purchase property in Canada through me,
yeah.
and I've always told them that if you're looking at something, that you're making 35% on annually, right? So first year you make a little bit less,
Yeah.
right? That extra tax that you're going to pay on the property is going to be diminished. You're not even going to feel the effects of it by year two,
Yeah.
right? Your investment is going up and doing so well that 10%, 15%, or now 20% is how is it going to affect you? So you didn't make any money in the first 2 years, but you saved the rent and you paid off your
Uh-huh.
mortgage and you did all of those things. And then year three, you're going to make really good money
Yeah.
if you look at 10% increase on the condo market. And like you said,
Yeah.
mostly all the investors are in the condo
Uh-huh.
market does not go up by 10%. It always goes up by a lot more.
Yeah.
Even through COVID, it was down, and it was down by to 7 or 8%. And then, right after, now we're looking at 20-25% increase
Yeah.
annually. So
Yes.
so yeah, so first year you made a little bit less money, you know.
So I think that the noise about the interest rates going up is just the media and newspaper, and we on an individual basis not understanding this is just a temporary phase. And whenever there's a noise, it gives you an opportunity to let's focus on the
Opportunity.
opportunity. Let's
Mhm.
focus on it. You guys all have data. You can see that before something was getting listed for 2 million, it was going for 2.5 million. Now it's getting listed for 2 million and getting sold for 1.8 million. Show that thing. Most of my buyers right now, suddenly in the last 1 month, everyone is a home buyer and everybody's upgrading because they got it. That they're not going to see this dip again. They don't care if the mortgages are 30% more or so. They are going to get a much better deal as they're going for a bigger house. I think it's all up to the realtor how they present it to their client. We over here, we have not seen any change the way we were conducting our business 2 months ago, last month, and even this month, and even moving forward. I think it's just
Yeah,
the same
it's
thing.
it's a matter of articulating the whole scenario. We
Yes.
cannot panic. with whatever media hype there is, guys. We
Yes.
have to always be very, and this is the whole point of having partners like Kamran and others, is that you guys always know the flip side of it, and you can inform your clients as to what really is happening. This is an opportunity in every which way. Nothing has changed. Nothing has changed. Same amount of people coming in, same lack of inventory, and like what Kamran's saying, they can build 1.5 million or whatever lack of inventory we have, and on top of it, we've not stopped in immigration. So immigration keeps coming in, 140,000 people annually
Yes.
as
I believe in
international
that.
investors. We're not even talking about what's happening locally
Yeah.
within the country, right? So, yeah.
I think we are in a very healthy real estate market. It's just a temporary phase. I'm going to say it again and again. It's just a temporary phase which might last for 4 to 5 quarters maximum, but this will gives you an excellent opportunity to position yourself for the long term. I'll say
Yeah.
so. It happens in
And
the
there will
stock
be
market.
people
So
panicking, and they
yeah,
will be putting pauses on the market. And this again is an opportunity for you
yes,
in
yeah,
every which way to go in with your buyers. Each one of us know this, that for every listing you have 6 buyers,
yeah.
right? So you know that the availability for you to do a lot more business is based on that, right? 6 buyers versus one listing. So go
It's
ahead
all
and
about math, math,
yeah.
math. See, people they just have to do basic math. Okay, if your mortgage was coming at let's say $3,000 with new interest rate, it's coming at now $4,000. All you have to tell them for the next 2 years, just to be on the safe side, for the next 15 months, put $15,000 on the side from your actual monthly budget. But you're getting a property $150,000 cheaper than what you were supposed to get in February. Simple math, as you mentioned, it's just the way you present it to them. And when I sit with
Mhm.
my clients, in our firm at MLP, we do not get involved into any kind of real estate transaction. We do not even say that what kind of property you bought. We stick to the numbers, and we know that this is the perfect time to buy a property. If you have budget issues, if you have a down payment of $200,000, doesn't matter. Put $10,000 on the side for additional monthly payments. Am I right, Sabia? It's
Absolutely.
all about
I
budgeting.
100% agree.
Budgeting.
Yeah.
Don't do on a monthly basis in this cycle, current cycle. Don't do it on monthly basis. Just do it on an annually basis. This was my annual budget. There's a bump of 15% in it. Just put it on the side. But I'm getting a property at a very good price, which was not there.
And guys, I mean, Abu has asked a question which actually answers itself. He says there's an impending recession being speculated all over media that's feeding the buyer with a lot of fear and staying away
Yeah.
from getting in. What's your opinion? I'm going to say something for it. So whenever there's a fear and people are not purchasing, right? We keep talking about it, and since Kamran and Sana and Wad now have come on board with us, we've been talking about looking at your client. Sana said this amazing thing, which was 80, what was it, Sana? 20% of your clients will give you 80% of
Yeah, that's
Yeah.
exactly it. So
repeat
it's
business.
20% of your clients will provide you with the 80% of your revenue. So once you like mold them, understand what they need, what they want, and like what Kamran was mentioning, having these clients buy their dream homes, this is probably the best time to do so, because now they can see it's the market's calm and it's in their interest. So it's very much catered, like 20% is 80% of your revenue.
Yeah. So here's my thing, in which we keep talking about, is portfolio building, right? So
Yeah.
you find you have your dream home or not, but you have a property, you have enough equity in it, you're going to reinvest from it. This is
Yeah. Yeah.
where real estate becomes an investment. And if we
Yeah.
haven't understood that aspect of it, we're going to be left way behind, right? So we're talking about real estate as an investment. If I wait 7 to 8 years for each of my clients to move their property into another home, their principal residence, I'm not doing any business, and I'm not doing any justice to them,
Yeah.
because the market will be flexible
Yeah.
for both buying and selling.
Yeah.
But here's where my end is coming for what Abu's just said is, if everybody's not jumping into the wagon, who's a buyer, who's probably an end user, right?
Yeah.
I'm saying I'm an end user, I don't have enough money, I'm going to wait for the market to drop, and I'll keep waiting for the market to drop. What do I become at that point? A tenant.
Yeah.
Okay. Now you're here in a market where you're actually selling investment properties. We've
Yeah.
seen this all the time. When the market goes a little bit lower, what happens is rents are hiking.
Yeah.
Right? Now you went in with a higher, for your client or yourself, you got a property on a little bit of a higher interest rate. You're going to get more rent anyways, because there'll be a
Anyway,
lot more
it will
people
be
in the
passed on.
market
Yeah.
renting, because they're sitting on their fences saying, we're not going to purchase right now. We sold on a high price. We're going to wait for it. We're going to wait for the market to drop. And what do we become in the meantime? We become tenants. Amazing for me. That's great news for me. Let you be the tenant while I become the landlord.
Yeah.
Make sense?
Yeah. Yeah.
Yeah. Yeah, Abu, good luck with the Green Party and their 20% tax. The Green Party has no standing. I don't
Yeah.
know if all of you can read tax or not, but Abu was saying yesterday the Green Party is talking about proposing 20% tax on second property onwards. Yeah, Green Party is not winning federal elections
Yeah.
ever, so that's never happening. So
And
yeah.
as I mentioned earlier, that I have seen in the last 1 month or so, many of our clients who were not part of this real estate investment in the last 5 years, they are the ones jumping into this market because they know this is the opportunity. In 2018, due to the COVID, people were confused whether it's a good time or no. Everyone got surprised in 2019, 2020, 2021, how the market reacted. But the people who were sitting on the sidelines, sitting on a ton of equity, we are doing tons of refinancing for them, and they're the one now buying in this market because they know in this current environment, they can get a much better deal. And as Sabiha mentioned, the rents are going up. Rents are not going to come down. It's all
Right.
about cost of doing transaction.
Yeah. You buy a new property right now, you put in on higher rent, and then
That's it.
that's the rent that you're going to be living
If
with
your
till
mortgage is
your
higher, you're
10.
going to ask for higher rent. Simple as that.
Of
There's not
course.
enough
Yeah.
units. People need to live, right?
Yeah.
And the
Yeah,
employers are
absolutely.
increasing the wages. It's
Any
very
questions?
simple.
Any more, guys? You can unmute yourself if you have any questions. Otherwise, it has been yet again an amazing session, guys. Thank you so much for coming on board. I know you can see Wad and Sana and Kamran. This is your mortgage team for the brokerage. They have an office which I have to finish renovating for them. But they have an office in the building on the third floor. I will be sending out a recording of this session with their contacts yet again. And yeah, so stay connected with them, guys. They're a great team and they're amazing at what they do. So thank you everybody for the session. And we see you soon. Bye.